Hello everyone, we present here investigating into partnerships with host market allies in high political risk context, American and French investment in Spain in the first half of the 20th century. In this ongoing research, we first aim to investigate the reasons for and the results of partnership with host market firms as the entry mode of multinational enterprise into a new market. From an institutional perspective, our second aim is to see to what extent an increasing political risk leads to partnership. And with two case studies, we want to know whether those partnerships worked or not and why they worked or not. To do so, we focus on the American and French investment in Spain in the first half of the 20th century. Of course, as business historian, we apply business history framework, but the field is so rich that we feel that it's a great opportunity to bridge gaps with other disciplines. This is the reason why we borrow some concepts of the so-called comparing capitalism point of view. An extensive and important focus of international business literature is on how institutional context affects multinational enterprise entry mode strategy. The decision depends on the political and the contractual hazards. According to Hens, partnership could reduce or at least mitigate these risks. However, we would like to explore the maybe more controversial suggestion made by Jackson and Dig on the fact that international business takes for granted institutional context. They propose to integrate the diversity posed by comparing capitalism to the international business agenda. That means that taking into account that the institutional context is not a monolith, it is possible that the approach of multinational to this context is diverse and multidimensional. Of course, there was a lot of academic production that focuses on the locational factors that affect modes of entry, such as partnerships. These partnerships not necessarily adapt successfully to change in host market politics. In any case, scholars tend to consider the local elites as a monolithic group. In this paper, we are in favor of not only a multidimensional, but also long-term analysis, and we take a step forward by focusing on diversity on the host partners, and also on the diversity within each partner. Spain, first because it was a peripheral country that was historically dependent on foreign technology and foreign capital. In previous work, we pointed out that Spain had four main partners in the 19th and the 20th century, France and Great Britain in the 19th century, Germany and the USA in the 20th. Of course, as other countries, Spain experienced in the first half of the 20th century the rise of economic nationalism. But I think we can agree that in the first half of the 20th century in Spain, it's not only economic nationalism, there was very turbulent political times. Finally, we think it's interesting to look at the host market elites that are more heterogeneous than expected. France. First of all, of course, there are why France and why the United States. First of all, there are two of the main foreign partners, and they play a central role in Spanish economy in different periods of time. And furthermore, there was a shift between the leaders. The US commercial and manufacturing activities expanded since the 1920s to the detriment of the 19th century's great international investors such as France or Great Britain. Let's take a view now of French investment in Spain. Spain, that European California, in the words of Émile Pereire, one of the most important French bankers in Spain in the 19th century. It is important to note that the banks were the main agents to pipe capital flows through the Spanish market and became indispensably to the country. Economically indispensably because they financed not only the state, but also railways, mining, and public utilities, and politically indispensable because they have privileged access to the political and financial elites. Despite their undisputed lead in the 19th century, the second industrial revolution and the rise of economic nationalism posed many challenges to French investors that were unable to address. That meant the loss of ground in the interwar period, above all in the classic sectors, even if French capital remained active anyway. First case of study, that it's a perfect example of what I've just said. We're talking about Paribas, the Bank of Paris and the Pays-Bas. Founded in 1872, Pays-Bas had a leading role in the Spanish finances since the last third of the 19th century, and saw a great business opportunity which became a complete failure. This complete failure is the story of Banesto, the Banco Español de Crédito, the Spanish bank created after the complete liquidation of the Crédito Mobiliario, the Spanish subsidiary of the French Crédit Immobilier. Banesto was a joint venture with Spanish Financier, and the resulting bank was a big bank from the beginning. Had 40% of the equity and inserted Banesto in its international network. But the joint venture had two problems. First, there was an agreement on short term, but a very different vision on the long term. Our bank has to work in Spain and in pesetas. It's a sentence of Manuel Fernandez Longoria in 1904. And I think it's a good summary of the Spanish stakeholder attitude. Spanish shareholders were overrepresented, and that's the second problem. And in this condition, it is only a matter of time that what I call the Great Replacement began. And the Great Replacement had two tails. First, capital increases no longer controlled by Pays-Bas. And second, the entry of Spaniards in the board of directors when the French left the board of directors. At the end of the 20s, Banesto was a full Spanish bank. We can say that Pays-Bas bet on the wrong elite, or at least in a non-reliable one. An elite that had other plans for the business and was strong enough to implement and plan the takeover.
And what happened in the case of the American foreign direct investment? The first wave of American investment took place in the 1920s, as in the rest of Western Europe. This expansion, however, was hindered by the Spanish Civil War and by the autarky that followed. However, even at that time, there were a few business opportunities for some foreign investors, particularly for those working with the state-owned oil companies. But the definite expansion of the American companies took place during the liberalization of the 1960s. At that time, the US became the largest foreign investor in the country by far. Up to now, this is consistent with what we can expect according to the existing economic policy in Spain at the time. However, if we look at the entry modes, we can observe quite a few curious things. This information is the one that you have in this table and the next one, okay? So in table 2, you have the entry modes. Well, you have a few information about American companies operating in Spain at that time, and including the preferred entry mode. So you can observe here, okay, that wholly owned and joint ventures with controlling participation were the majority. In spite of the existing restrictions to foreign participation in Spanish companies, no more than 25%. So that suggests that the impact of economic nationalism was rather limited. As time went on, we can observe also that partnerships became increasingly relevant, particularly in the case of manufacturing and assembling activities. The recurrent strategy was to look for a local partner first, to acquire later on the whole capital. We can also identify a wide array of host partners, but above all, domestic business groups and foreign-oriented entrepreneurs. In order to illustrate the relationship between local and foreigners, we have also chosen a case study, as we did for the French investment. We choose the case of the International Telephone and Telegraph, the largest American investment in Spain until 1945. This telecom group was created around the foundation of Telefónica in 1924 to exploit the Spanish domestic telephone monopoly. But the Spanish subsidiary became the cornerstones of its global expansion, which took place really very fast in the 1920s. This American group established a long-lasting partnership with a few Spanish banking and industrial groups, being the most relevant one, the Urquijo Group. The locals were minority shareholders but occupied top positions on the board and on the executive committee. These partnerships became crucial to control the subsidiary and to overcome economic nationalism in this so strategic sector during the Second Republic, the Civil War, and the first years of autarky. So this partnership was a way to reduce political risk. But it was also a way to guarantee the fulfillment of the advisory and the supply contracts signed between Telefónica and ITT after the nationalization of the former. We can observe that even in that context, that is nationalization and the years that follow, there was a very low contractual hazard for the American company. So we can observe that what happened in the case of ITT was quite different to what we have identified in the case of Paribas. What can we conclude comparing the cases of the French and the American investors? Well, first, rising economic nationalism, that is, rising political risk, led to an increasing preference for partnerships as multinationals, companies' mode of entry. This is consistent with international business literature. But we can observe that Julian subsidiaries were relevant all the time anyway, and that contract ventures controlled by Spaniards proliferated in the 1960s, when the political risk was lower, but the chance to get state subsidies higher. Second, we can observe that increasing political risk led to a rising contractual hazard for the French investors, certainly, but not in the case of the Americans. And many partnerships even ended in the US partner gradual acquisition of the whole share capital. We identify or we propose three reasons for a so different contractual hazard. First, asset complementarity, which existed for most of the American ventures, so there was no need by part of the locals to expropriate foreigners' assets. Second, industry. Americans invested more in high-tech industries in which the locals' capacity to overcome the business or to monopolize the business was low. And three, host partners. We can see that the Americans partnered more than the French investors with domestic groups which were pushing a gradual liberalization of the Spanish economy and that wanted to partner with foreigners in order to have the capital and the technology they need to expand in this gradually liberalized economy. Finally, our research offers a multidimensional and longitudinal analysis of the impact of the host market institutional framework in multinational companies' mode of entry decisions. From our point of view, our research contributes to business history and to international business literature by capturing the different reasons to partner, by showing how multinational companies interact with their domestic partners in the long term and the consequences, effects, and implications such as interaction. And also our research shows the non-monolithic character of domestic partners, whose interest will also vary over time. Thank you very much. Please don't hesitate to contact for further information, for comments, for suggestions. All your comments will be very welcome. Thank you. Bye-bye.